Hey, this is James Glover, dual CEO of JLG Holdings and Shakur Capital. Alright, this is a compensation and a breakdown of how JLG Holdings and Shakur Capital gets paid, and also how you, the investor, gets paid as a fund investor, as a part owner / partner investor. So for all the returns that we make over 45% or more, we as a company will get 50% or more. That's our basic standard and compensation. Here is an example, and let me go right into this. So in this example, we have 4 fund investors, all investing $5,000 each, and we have 1 partner / owner investor with an investing stake of $10,000 and a stake of 5%. All right. In this example, our total investment amount will be $30,000. We have 4 investors, that's fund investors. They all have invested $5,000. So you do 5 times 4, it's 20,000. And then you gotta add the 10,000 that the partner / owner investor invested. So that's a total of $30,000, and that will mean we have $30,000 under management. So we would likely only invest half of that money. So that will leave us $15,000 to invest, $15,000 not invested. All right. Now, I put a statement in here. I know some people might doubt or question our ability to produce large returns, but that's actually one of the main reasons I actually started JLG Holdings and Shakur Capital. Some other core reasons as well, but this is one of the main reasons: to produce larger than average returns for everyone. You know, middle class, rich, not rich. That's what our job is to do. So if you invested with us, that's what you can expect. So I wrote, let's say we took that 15,000 and we made 1,000% return. So 1,000% return on $15,000 is $150,000. Now that's a lot of money, but our investing style, this is more than doable. In addition, we may have more than this amount of capital raised as well, which will make it a lot easier as well. So this is realistic for us, and another way this 1,000% return can be made. It could be made in majority of 1 investment or 2 or 3, but we can have a smaller investment that has a really big return of 2,000% or more. So in this example, it shows 2,000% as high as 8,000%, and that will cause or help cause us to, have an overall return of 1,000%. We had 2 of these. Even if we had some losses in there, this would get us up to that, percentage. And with my investing style, this is possible. So now let's go to the next clip. So we took the 15,000. We said we made 150,000. Here's the breakdown and how it would get split up. First, we will subtract $15,000 from the initial return of 150,000. The reason we're subtracting 15,000 from the $150,000 is because $15,000 was used to make this amount of money. So that's why we're subtracting that right off the top. If we made it a different way, doing multiple investments, this subtraction would be a little bit different, but we're just going to stick to this right here. So you subtract $15,000 from 150, that leaves you with 135,000. Next, we have to take 5% out of the 135,000 because we have a partner / owner investor who has a 5% stake in a company, and that equals to $6,750. Next, after you subtract the 5% from the $135,000, and that leaves us with $128,000 in returns. Since this was a big return and we made over 45%, JLG Holdings or Shakur Capital will get half of this. So you do $128,000 divided by 2. And when you do that, you get $64,125. All right. So that $64,000 will go to the company. The other $64,000 will go to the 4 fund investors. All right. So you can see here a clear example of the $128,000 being divided by 2. And you can see the $64,125 twice. Now, here's the breakdown of the $64,125. And this is how it's split between the fund investors and partner owner investor. So on the left side, you see investors, and then we got a list going straight down of the investors. Then the second column, in the middle, you see investment amount. Then on the end, you see return on investment. So I just made a couple sample names as investors. We have real investors, but this is just for example. I put Patrick C, and that represents Patrick Callahan, one of my buddies that I met in my IT career. He's the CEO of Tech Impact, and you know, he helped me a lot in my IT career, and he's one of the potential investors I would like to get. So I just put him down. I put my best friend and advisor and friend Roderick down in risk management for the company down. I put me because I'm an investor, and this is an example, and I'm already invested in my own company. And then I put Sam I am. That's a little Dr. Seuss right there. And the partner owner investor. So each of these initial 4 are fund investors. They all invested $5K. So you see that there. And then we have a partner owner who invested $10,000. As you can see, fund investors get paid based on the percentage of money they have invested as a fund investor compared to the total amount of money raised by the fund. So that means as a fund investor, we have 4 fund investors, each investing $5,000. So that $5,000 times 4 equals $20,000. $20,000 represents 100%, and each person's $5,000 represents 25%. So their returns, they can expect to get 25% out of the total money the $20,000 make. So that's what they get. And in this example, it's 23.5. We provided 5% in this example to the partner / owner, and that will not be the normal case, but in this example, that's what we did do. And it's still over a 300% return for fund investors, but that is the standard. It is based on the percentage of money that the fund investor invests compared to the total amount invested by the fund investor. So the company revenue will be $64,120. Then you have to add in another $15.2K as a CEO and fund investor. I'm, am one of the individuals who made, $15.2K. So that will bring our total up to $79,348 in profits. So I just wrote $79,000 in total profits, and this capital will likely be all the company's money. I want to show you our cash flow next, and this is the cash flow. We have $64,000 in profits, another $15K from me as a CEO and fund investor. Also, I invested an initial $5,000 as a fund investor. We got $10,000 from the partner owner investor, 9.9 in returns from the partner owner investor, And when you add all this money up, we will have $104,000 in free cash. And this doesn't include leverage, and this doesn't include the three fund investors, subtracting myself, their initial investments and returns. So I might make a small brief video explaining or adding that in, but this is a lot of money to have in free cash. It's based off a big return, but it's a return that we believe is more than doable, and we could easily, exceed. But this is a lot of free cash that we will have, if that were to happen. So I think it's a good business. But doing things like this, will help us increase and raise more capital and get more partner owner investors as well as fund investors. Thanks for watching. Appreciate it. Hope you got to see the whole video.